Alright, what's going on, guys? Welcome back to another video. In today's video, we're going to be going over how to identify the draw on liquidity. So for example, we're going to start off with this week and just based off of price action, and we're going to start off just kind of the daily candle and then we'll go from there. So if I go just to random place, if you look at price here, don't ignore my indicators, don't worry about anything. So we're just looking at the previous day close of the daily candle, right? And this is just going to show you guys how candles work and how the market works and how structure is. Because if you don't understand market structure, it's really hard to apply context into your trading, and it's going to make it 10 times harder, right? To understand where the draw on liquidity is, you're going to have doubt. And once you understand where the draw on liquidity is and what the probability of that, you have to accept the probability, trust in yourself, and then move on, right? Once you can do that, that's like the first phase. I feel like that you'll end up passing these accounts and eventually reaching your payout. So, and then after like wanting to scale, that just comes with time, and you have to build the mental strength of, you know, getting used to risking heavier, being more patient, being pickier, and that just comes with time. So, and that's currently the phase that I'm actually going through right now, where I want to scale to 10 to 20K months consistently, and I have blown accounts in the process because I'm not used to it. And you know, but these things come with time. But yeah, so you want to look at the daily candle, right? And when you look at the daily time frame, I'm going to show you guys a trick that has helped me a lot. So for example, if this candle closes above the previous high, we're most likely going to be bullish and target what? The next high. So what am I expecting the next candle to be, right? If you look at price action, anytime we're bullish, what does price do? We open lower, sweep previous day low, and then we target previous day high, right? And I'm sure there's like a higher time frame PD right here. Like if you can grab equilibrium from the previous day candle, what do we do, right? So if you grab the range from this previous day candle, we come to equilibrium, open lower, sweep the low, and then we get that expansion higher. So again, this is just like an A+ example. What am I going to expect here? We want the next candle to open lower into what? Maybe this order block right here, and then from my stomach, and then go to this high right here, this buy side liquidity here. So let's take a look. Boom, tap into the order block, we hit the buy side liquidity. Okay, now what next, right? And we closed above this high. Since we closed above this high, where is the next strong liquidity? Most likely this high. Let's take a look. Boom, we closed above the high. Where do I think the next strong liquidity? Again, since we're so close, I believe this is here, right? So let's see what happens. Boom. All right, this is a new weekly candle. So this is a Friday coming into Monday. On Monday is gonna do a open low for the week, right? So we're probably tapping into a lower time frame order block down here, right? Boom, tapping into a 4 hour. There it is. Let's look at the. Oops, I'm just going to 24 hours. Okay, if you look at this, we closed above. What was the next strong liquidity? Well, obviously the next high, which actually ends up hitting right there, but you probably don't get trade inside of this, honestly, because it opens higher. Your trade gets hit immediately, right? Cool, right? Now we're inside of key level, being this order block on a lower time frame. You can probably grab the consequent encroachment of this wick. This is mitigation. Again, this is a little bit more advanced. Like you'll get used to it, but whatever. We're coming to retracing into a lower time frame gap, right? From the daily, we're probably going to a 4 hour. And now, what do I expect price to do? Because we're still bullish. Again, I would like to see this, right? But again, let's see what happens. We're clearly bullish in this example, so we're gonna wait. And again, also, sorry, I don't want to interrupt, but did we close below this low? So if we're not going to be bullish, are we closing below this low right here? No, we're not, meaning we're not going to be bullish, right? I mean, we're not going to be bearish. Did this candle close below this low? No, it didn't. So I'm not going to be bearish. I'm going to look at lower time frame and look at context, right? Just because we didn't close above this high doesn't mean I'm automatically bearish, right? No, I got to look at context, right? But you get used to it. Like if we're just looking at it in that standpoint, the drawn liquidity should be this low, and then we should go higher from there, or maybe not. Let's see. We didn't even mitigate this, and then we just went higher straight to the drawn liquidity, right? So boom. Maybe this SMT, I wouldn't know. I don't know. I didn't find out, but it's okay. Now, what is the next draw on liquidity? We closed above the high. We closed above previous day high. Where's the next draw on liquidity? This candle high. Boom. Did we mitigate that? Boom. Yes, we did. Did we close above it? No, we didn't. Where's the next draw on liquidity? Most likely this low. Boom. Did we close below this low? No, we didn't, right? So where's the draw on liquidity most likely going to be? This high. Boom. Let's see. Nope, we didn't. We got 3 failure swings here now. This marks as low resistance. What did price do? We inverted this gap, meaning I'm no longer going to be bullish. Where's most likely to draw on liquidity? This low again. Let's wait and see. Boom, super low. What is happening? We're just like stuck in consolidation. Price is not telling me anything. So again, I'm going based off of the daily time frame. Where is price most likely going to go? Here again, we inverted this gap, so the draw should be lower all the way down here, but let's just wait and see. Internal low hanging fruit, there it is, goes lower. Perfect. We close below this low. Where's the draw on liquidity again? Right here. This low. Let's take a look. Boom. We close below again. Oh, what do we do though? We sweep this low down here, so this could be marked as a protected low now. So we're adding context into this, right? So we sweep this low, we close below. Where's most likely the draw? Could be higher here, but we're gonna wait. This is a big expansion move, so I expect this candle to be consolidating, but it's fine. If we just look at previous candles, again, if you provide context, it's hard not to provide context because I'm so used to it. But based off of this example, if we close below the low, this should be the next low, but obviously we swept this low, so the next draw on liquidity should be higher, or consolidating, but we'll see. There it is. We're just rebalancing, right? Again, price is not closing below or higher, so we're gonna wait. I don't know where the draw on liquidity is. Boom. So now, where's the draw on liquidity, right? So let me delete all this. Why can't I? All right, it's fine. Just do this. We close above this high. Where's the next draw on liquidity going to be? The next high. We closed above here. So I want the next high to be draw. We didn't close above. Where's the next draw going to be? This low. It's out of here. Boom. We swept the low. Did we close below? No. Where's the next draw on liquidity going to be? This internal high, but we're going to be internal to external. So this high right here. Boom. That swept. Did we close above? No, we did not close above. So where is the draw on liquidity? Right here. We didn't close above these highs, so next draw on liquidity is going to be lower. Nope. And there's your failure. So that's going to be a day where if you don't get confirmation, it fails there, right? So again, we go higher. Did we close above here? Yes. Where's the next draw on liquidity? Most likely this high. Let's see what happens. There's your failure again, right? Did we close again? 2 failures in a row. It happens. Where's the draw on liquidity? This low, right? Because we closed below the previous day low. See, there it is. Boom. And we ended up actually sweeping this low all the way down here again, but we closed back in the range. So where's the draw on liquidity now? This high. Boom. That gets taken. Did we close above or below? No. So I'm not going to pick a side, right? Like we swept. We should have closed above for a clear direction. This is just a low. Again, if I were to put my bet on it, where do I think we're going to go? Again, after this big close back in the range, I believe we're going to go higher again. This is not me providing context. Boom, right? Did we close it back up in the range again? Yes, we did. So where's the draw on liquidity? The next candle. Boom. And that's where we are now. Okay, so now you guys are kind of getting the point. Out of all these days, this one hit, this one hit, so that's 3, 4. This is your failure, right? If you provide context, you don't fail it. Like, it should work, right? So let's just say this one fails. This one works. 5, 6, 7, inverted. You're gonna go lower. 8. It didn't close. Again, it closed below. You got 9. Again, close below. 10. Goes lower. Swept the low. 11. Again, I say the draw is higher. That's your failure. You lose there. Again, did we close below or above? No, we didn't. So I'm not picking anything, right? Then we go higher. We close above the high. What do we do? The next draw on liquidity. That's your failure. We didn't close above the high. Where's the next draw on liquidity? At the low. That's a win. We didn't close back in the low. Where's the next draw? At the highs. That's a win. Did we close above the high? No, we didn't. So where's the draw on liquidity? Lower. That's a loss. Did we close above the high? Yes. Okay. Did we go higher? Boom. That's a loss probably. We didn't. So where do I think the draw is liquidity now that we closed below the low? At the lows. Boom. Did it hit? Yes. Okay. Now what do? Again, we sub right here. So boom, we close back in the range. Is the draw liquidity lower? No. It's the higher. So you have to wait for context. Nothing happens. Consolidation. But we do win here though. We do take the high right here, internal. That's a win. Again, where do we think the draw is? Higher, close above. We take the internal. Yes. So again, you're gonna win more than lose, right? And this is just looking at it from a daily standpoint, right? And you're of course gonna look for confirmation. So if we're gonna replay this entire price action here, and I'm gonna show you on the lower time frame what to look for now. So now that you guys understand the daily time frame, we're closing above highs and lows. We're gonna look at context, right? And now we're gonna implement the higher time frame highs that are going to close with context with lower time frame structure, right? And we're going to wait for if this then this. So if we go back to here, again, obviously we know that the draw liquidity is up here. Doesn't matter though. We're looking at it from day to day, okay? So if we closed above this high here, right? Where do I think price is going to be? Bullish. So what do I want to see? This get mitigated. And then I want to see price go higher. So let's go on the 4 hour. So obviously this is the target, right? But where do I expect the move to happen? Once we mitigate this order block that I have marked out here, right? So even though this high might get taken, let's see if it does. Yeah, it gets taken right away. What am I expecting price to do? Come to the order block, all right? So now if we implement the 4 hour, right? Where do I think the draw liquidity is? We swept this low, right? Swept this low, closed back in the range, mitigating the daily order block. Where do I think the draw liquidity is? This high, okay? So now I'm going to look at lower time frame structure now from the 4 hour to the 1 hour. What is price doing? We are inversing this 1 hour. I do believe price could maybe give us a retracement here, and I will do some long. I would like some longs like this, for example, something like this. Like right, this is higher time frame. Let's see. Nope. Do we get entry? Nope, not yet. I don't think we'll get entry. Maybe we do, maybe we don't. All right, so we're coming into this gap here. We're getting displacement higher. I don't think we mitigated it. Maybe it's a 4 hour for value gap. Nope, not yet. Okay. So again, nothing yet. We're waiting. Okay, perfect. The draw on liquidity got hit. I want to see a for value gap tap in here. This one ended up getting tapped. That's fine. Doesn't matter. Okay. What was the draw on liquidity? Higher. What did price do? Inverse this for value gap here. Right over here. Again, if you want, you can have your entry there. And then once we hit this high, that's your break even, and you can target a 1-to-1. I don't know if we'll hit it, but let's see. There it is, 1-to-1 trade. Boom. But it's okay. Let's look at price here. Okay, so we said exactly what we wanted. We needed this inverted gap. Again, I try to go on the lower time frame because it's obviously very clear that we're bullish, but we don't get entry, and that's fine. Sometimes you won't get entry, but this is how you identify. Now, since we're bullish, again, what would I like to see? This order block get mitigated, right? And I want to see a bounce from here. One of these gaps, either this gap down here or this gap down here. Let's see. See price here. We're clearly bullish. I want to see retracement. Order block did not get taken yet, so I do not want to see price go higher yet. I want to see lower. Boom. Okay. 4 hour gets tapped right in there. Boom. Busy. Now let's go on the hourly. I would like to see this low get swept and then a run higher from there. We swept that low. Nothing yet. We're consolidating. Okay. Waiting here, waiting. Okay, we're getting, all right, perfect. Did it sweep yet? Not yet, but we're gonna get the sweep probably here. Hopefully we get it, unless there's SMT there, then I wouldn't really know. Okay, perfect. Oof, that is a big move. Okay, so as you can see, there's probably SMT here. There has to be SMT. In my opinion, I think there is. I would have to check real quick, but I think there's SMT there. There isn't, but there is one here. Okay, so the SMT was here, I guess. Boom. So the SMT was here. Okay. Boom. Again, we came to the key level. We're displacing higher. Where do I want to see now? All right, looks like this gap. Let's see if it respects. We're still in this key level. Okay. We're looking at price. We still have yet to take out this drawn liquidity. Let's wait and see what happens. Perfect. What do? We swept. Again, key level. This should be a protected low. We grab the range. We sweep the low here. Boom. I'm going to look for entry. So again, I know I'm on the higher time frame, and I don't want to like seem like I'm not trading this, but like I would take a trade inside of this. I'm not trying to go over my entry model. I'm just trying to go over like what makes sense, right? So if you look at price here, we came into this and now we're displacing through. Obviously we delivered to the drawn liquidity, right? If you break it down, SMT at the low, we come back to the gap. What do? We sweep the low, go back into the range. What am I looking for? An entry, right? So my entry would be inside here. So there's a 4 minute inversion here. So I would enter long right here. Stop at the low. I took this trade actually. I feel like I took this trade. I'm not gonna lie. It was a 3 minute. I think I took. Yeah. I took this 3 minute. I believe. I feel like I took this trade. I'm not gonna lie. Okay, I took this. I believe I took this trade, and I did take this trade. And then we ended up actually turtle sweeping here. We ended up sweeping this. And I added, because it was a 1 minute inversion. Where is it? There it is. 1 minute inversion. I added here. I remember I took this trade. And then we hit data highs. Yeah, so. I ended up taking this trade here. I remember. Cool. Perfect. So if you look at price here, what are we doing? Coming back to a higher time frame key level, swept the low, close back in the range. And you're just looking for an entry model, right? You can take whatever you like here, right? There's a close above here. What do? Tap back into this breaker and you can take the long and then hold to the external draw, right? But if you can see, price always retraces, taps into this, and then what do? Invert this range here on the hourly, come back, swept the hourly low, tapped into an hourly gap. What are we gonna do? Go higher to the external draw, right? So now we're just breaking it down how lower time frame gaps also get respected based off of the higher time frame. So now we're gonna keep going and do one more time. So let's go on the daily. We swept the high. Where do I think? And we close back in the range. What do I think it's gonna be? We're gonna go back to the low. Okay, and I believe the drawn liquidity will be lower. Okay, what do? Tap inside of this 4 hour for value gap. Where do I think the drawn liquidity will be? Lower. Okay, so if I look at price, where should we go? To this order block and reject the order block and go lower. Let's see what happens. Boom. We reject the order block, go lower, and then we fucking go right back up. So we go here, boom, order block, delivers lower, and then we go right back up. Okay. Where is it? See, we use this order block here. We open, lower here, and then go higher. So look at price, go on the hourly, here, boom, delivers there. See that? Open, lower, and then goes higher. Okay. Draw liquidity is there. Now we're just waiting to see next day. Okay, tap it into the daily. We failed to close. Where do I think the draw liquidity is? I think it's going to be higher. Now we're going to go on lower time frame and confirm if we get that. So we're going to go on the hourly, 30-minute. There's no gaps. Okay, this gap should send price higher. Okay, and let me make sure there's no other gaps inside. Okay, if this 5-minute gap inverses, we should go higher. So we're breaking it down. It didn't inverse yet. So it never inversed, right? So that's your confirmation. This is what I'm talking about. If this 5-minute would have inversed here, that would be a long. Why? Because we tapped the 30-minute, tap in this order block down here, and now we're invalidating this gap. So this would be a long, stop would be at the low, and you would target this high, and your break even would be the equal highs here. This would be your break even, and you would go take some longs there. But obviously it never inversed, right? So this is why you look at confirmation. You look at the daily, and you look if we want to deliver there. But look, obviously price is now, no, it doesn't want to. So now we're going to go on the daily again. I'm going to look at this. Boom. Can I get next candle? Okay, perfect. Now what do? We inverse this daily. We never hit the high. So what do we think the draw liquidity is? This low. So as you guys can see, like there's going to be times where you just don't get entry, and that's fine, right? So now it's aligning everything where everything makes sense, right? So now what am I looking at? Okay, where is the only gap that we can deliver from that I believe will make us go bearish, short? This gap right here. Okay, so I'm expecting price to open higher and then go lower. So again, since that's the only gap, I'm going to be shorting from there, right? We're just looking at context here. Boom. See if we go lower here. Okay. Boom. There it is, right? We sub the low. Boom. Draw liquidity should be higher. A big expansion move, right? What do we expect? Consolidation or retracement. Well, I expect a retracement in here. After this big expansion move, I expect like a retracement, right? But it's probably going to be to the wick, if I'm being honest. There it is, to the wick. Okay, if we're bullish here, so this is key. No, let me go back to just one chart. If we're bullish here, what is price going to do? What do we want to see? Okay, if we're bullish here, again, this wick is a little bit more advanced, but wicks act as resistance, right? Big wicks. So what are we going to tap into? Equilibrium. Is there an hourly gap inside of this? 30-minute gap. There it is. So there is a 30-minute inside of this. What would I like to see before I go long? A sweep of the low, right? Because this would be a 4-hour or a daily. So the next daily candle opens lower, and what are we going to target? The daily high. Okay. So I'm going to mark this as sweep. I'm going to mark this as sweep. Okay. And let's go from there. Let's see this candle. 6 p.m. 10 p.m. 2. All right, perfect. 2 a.m. Open lower. That's London. So London put low of day right there. Boom. Now what do we get? A change in state of delivery or market structure shift. This order block would be a longing opportunity, something like this. I would put my stop at the low, and I would target the high, right? Obviously this RR is kind of chalked, so I can put it a little bit higher depending. We get entry, and there it is. Boom, we get the order block, or the breaker, sorry, on the hourly. What do? That's your longing opportunity. Boom, and then we target the high. Boom. Obviously, I will look for a trade inside of 9 a.m. here, but again, I'm not going over my entry model. It's just something higher probability for what I'm looking for. If this 4-hour for value gap still respects, I'm gonna look for longs. Why? Because we just came out of a key level, and I believe the drawn liquidity could be these highs. So if this respects here, we should be going higher, right? We're gonna go the hourly, 30-minute. Where's the highest time frame gap? Going to the hourly. Is that the highest time frame? I think that is. Yeah. Okay. The hourly gap gets inverted. Now we should be bullish. Where to? Maybe to this high here. Okay. Let's see what happens. Okay, that's break even. Obviously, this is break even. And let's see, we're most likely going to stop that break even here. Okay, we get stopped at break even. Okay, obviously. So now what are we going to do? Reevaluate the trade. What happens here? I do believe the drawn liquidity is still higher, but I need a retracement to what? A gap, right? This gap gets invalidated, so I don't like it. What do I want to see? These lows get taken and then tap into a gap right here. Okay, this is the gap that I'm now looking at. Boom. Let's see. Okay, we tap the gap. Obviously, we would look for a lower time frame inversion of the entire leg. Is there a 5-minute here? Okay, there's a 5-minute gap. Once this 5-minute gets invalidated, you can go long. Okay, this gets invalidated. So now, if we're looking at price, we're just literally looking for everything to align for us to take a long. Okay. Okay. Go on the hourly. See, so on the daily, what did we do? Sweep, close back in the range. Now what are we going to look for? The drawn liquidity is clearly higher. If the daily close back in the range, we should target daily highs as well. So there's going to be daily highs up here, so on and so forth, right? So all these are drawn liquidities, right? Like that. Boom. We should actually get that expand move. Look below monthly opening price, weekly opening price. This is a big buying opportunity. Let's look at price, the 5-minute inverse. Where am I going to go break even? So this will be my TP1. Whoops. This will be my TP1. 5-minute inverses. Bro, why is this coming out crooked? Okay. And then this will be my break even. Okay. Let's break even. TP1 gets hit. And let's look at price. And let's take a look at this. Straight to the draw on liquidity, as you can see. Boom. Okay. That's where we are now, right? So as we can see, all you literally need to look for is higher time frame gaps to get filled and then dim it down to a lower time frame. Again, I'm not going over my exact entry model, but you guys are getting the whole basis of it, right? Where everything looks undeniably clear. We sweep here, most likely going to be bullish, get displacement through, bullish. So like once this 4-hour gap gets invalidated here, right? Like we just saw, what became the drawn liquidity so undeniably clear? Again, before it even got inversed, I already kind of like knew because it made sense based off of structure. But what confirmed it? Once we inverse this, where's the draw? This high. What am I going to do for? Wait for a retracement. Into where? This hourly. Boom. I like this hourly at first, but it invalidated it, so I don't like it anymore. It needs to respect. It needs to be clear. Boom. That holds there, tap into there. Now that we tapped into the key level, I'm going to look for a lower time frame inversion. And again, if you look at price, again, I didn't take the 5-minute inversion. I ended up taking an earlier entry because, again, of my entry model, but I ended up taking, I have a trade recap of this. I ended up taking a long here. This was my long right around here. Okay. Banger trade. Look at that. Obviously, I didn't hold to that because of consistency rules. All I needed was this. So based off consistency, I couldn't hold it longer than that. I could only hold it till here. That's because that's all I needed, right? But you guys get the point. All you need is a small slice. You don't need this big ass trade. Like obviously it's nice, but eventually once I'm like not trading on evals anymore or fundeds, I'm gonna be trading on my own accounts, and that's the goal, right? And be able to scale as much as possible. So, but I just wanted you guys to just take like the information that is given and grow from that, right? If this is respecting, okay, this is disrespecting, price should go where? Higher to where? This high, right? So just take that with a grain of salt. Take that with a grain of salt, make it simple. Oh, okay, cool. Now I understand this. Now price should go higher. Let me look for lower time frame structure where it makes sense for price to go higher. There's gonna be times where it makes, like, we can, for all I know, we can chop inside of this and we might not get an entry. Or for all I know, we get an A plus setup, or we just deliver straight to the draw with no entry. These are 3 scenarios, right? But that's why it's important to have risk management, staying patient, and being picky, right? There's always gonna be countless of opportunities, countless. So don't worry about bottom ticking, top ticking. Don't worry about any of that shit. Just focus on what is undeniably clear, and then all you need is a small slice, and then move on. Okay. So, with that being said, I hope you guys enjoyed the video on draw liquidity, and I'll catch you guys on the next one. Let me know in the comment section below if this made sense, what videos you guys want me to make in the future. Again, I'm really trying to grow my YouTube channel and grow, my trading strategy. Really want to help people out there and motivate people and bring them along my trading journey, right? I've managed to get a few payouts already and managed to pass multiple evals, and now I'm just in the process of scaling my evals, scaling my accounts, and getting multiple 5-figure payouts. So that's something I'm really looking forward to. You guys can tag along, and I'm going to be really, again, sharing my entire journey. I give daily bias in my Discord every single day. I'm going over my good days, my bad days, psychology days, and just really focus on being as transparent as possible and just building a name for myself. So with that being said, I hope you guys enjoyed the video, and I'll catch you guys on the next one. Peace.